Creamer Media's Mining Weekly is interviewing Edward Stirk, the Director of Research of the World Platinum Investment Council, which on March the 5th published its Platinum Quarterly for the fourth quarter of 2024. Hi Ed, it's great to chat to you once again. With geopolitics capturing many of the headlines these days, Mining Weekly would like to kick off by putting this question to you. How have the various geopolitical issues around the world affected platinum supply and demand? And what do you see happening in 2025?
Thank you, Martin, and thank you for having me on to chat to you once again. It is the question of the day, really. Geopolitics are centre stage right now. There's a huge amount of rhetoric, in some cases invective that are flying around, and it's having an influence upon the movement of material and also how consumers are behaving. I think probably the first thing I would just sort of stress is that obviously there's been some overtures for some kind of rapprochement between the US and Russia, and there's certainly been some speculation from people as to whether that would improve the flow of platinum, palladium, other PGMs out of Russia to the world, and thereby ease any kind of temporary constraints. On our numbers, that isn't the case. We see that Russian material continuing to flow into the market, and it's fully baked into our supply-demand estimates. So nothing really changes really if that rapprochement does come to something. I guess the other side of the equation, though, however, is tariffs. The US is talking about inflicting tariffs upon various different nations and on different commodities or products, and those certainly could have a bearing. This is all forward-looking, though, really, rather than something that's pertinent to the last quarter. But certainly, the tariffs are a tax effectively on the consumer in the country where they're enacted, and there is a risk that if the US does actually decide to impose tariffs, that it could increase the price of products and thereby decrease consumer demand. It's also worth noting that tariffs are fundamentally inflationary in their effects, because they increase the cost of products, and so from an economic perspective, that could result in higher for longer interest rates in the US, and also a stronger US dollar, both of which are somewhat negative for platinum demand, and in terms of the stronger US dollar, also arguably for US dollar denominated platinum prices.
Investment demand saw strong growth last year. How much of this was in late 2024 and driven by tariff uncertainty and market turmoil? And do you expect strong volumes in 2025?
Investment demand was really rather fascinating to watch last year. We saw generally consistent bar and coin demand on the whole, if you aggregate smaller bars and coins and the larger ones out of China. But what really swung around was ETF demand. So we saw strong inflows in the second quarter of the year, outflows in the third quarter, and then demand return in Q4 again. And we also saw quite strong inflows into what we describe as exchange stocks, which are stocks held on in approved warehouses by the futures exchanges like NYMEX in the US. And those exchange stocks are used as collateral for backing positions in the futures market. And so we saw a very big inflow into the NYMEX approved warehouses in the fourth quarter. And that, to answer your question, is related to those tariff concerns. So effectively, even before the incoming Trump administration got into office, Donald Trump started talking about tariffs, and the very fear of those tariffs being enacted caused market participants concern regarding whether they would have to, if they were backing their futures position with, say, platinum that was lodged in a facility in Europe rather than in the US, if they had to move that platinum into the US, would they then have to pay tariffs on it? So they started moving it ahead of time. And we've seen this huge inflow of metal from Europe into the US, and a corresponding increase in exchange-approved warehouse holdings on NYMEX in particular. And that drove a significant increase in the Q4 demand figures as we report them. And that continued into the first quarter of this year. So ongoing elevated lease rates. So effectively that indicates that there's a shortage of metal in North America, and a continued flow of metal from Europe into the US and into those approved warehouse holdings.
You used the word NYMEX a lot, but Costco has been popping up. Has the selling of platinum bars and coins been successful in North America following Costco making platinum products available to its members?
It's an interesting question, Martin. I mean, certainly, Costco generated a huge amount of press interest in platinum as an investment product, arguably we've seen some spillover from that into other areas. We don't have a direct relationship with Costco, so we can't talk about how their sales have been going. But certainly, when they started holding gold investment products, it was sort of widely reported that resulted in a big spike in volumes for gold, and it's quite possible that that's been true for platinum as well. I mean, certainly it's become much more widely known in North America that platinum is an alternative investment to gold with many of the same properties, and that's something that's extremely helpful for investment demand.
And in your 2025 forecast, mining supply is down 5%. Can you explain the reasons behind that, and what are the directional risks to mine output?
I mean, it's largely a function of the restructuring. We have to remember that there are no platinum mines in the world. These are PGM mines, and there are also some significant byproducts, copper, nickel, chrome, that have essential bearings upon the profitability of the mining operations. And given that the price performance of some of these commodities has been challenged over the last few years, particularly the prices of palladium and rhodium coming down, more recently chrome weakening somewhat, it's made the economics more challenging. And the mining companies have overall done a very successful job of trying to combat that through restructuring efforts. And those restructuring efforts have resulted in reducing output in some areas. There's been some shaft closures and some reduction in the mining plans, and as a result, that's flowing through to our forecasts for 2025 in terms of output being lower. It's also probably important to emphasise, however, that 2024 was boosted somewhat by a release of work in progress inventory. So some of the miners have been sitting on material that was built up in concentrate form, sitting before the smelter, that built up during the Eskom-related power outage issues, where they were using their smelters to buffer their energy demands, but continuing to operate the mines and the concentrators. And so that work in progress concentrate that built up ahead of the smelters has some of that was released last year when energy was more freely available. And so the comparable between 24 and 25 boosted that 24 number in results, together with the restructuring and that 5% year-on-year decline for the 2025 output.
And when it comes to platinum recycling supply, this has declined to its lowest level in the Platinum Quarterly Time Series. Why is this, and what is the recycling output for 2025?
Well, Martin, it's a good question. I mean, the honest answer is that we don't have any hard and fast reasons as to why the recycling number has fallen as far as it has. What we can say is that there just is a demonstrable shortage of end-of-life vehicles and thereby end-of-life catalytic converters going through the system. We can theorize as to why there is that shortage. Arguably, people are just driving vehicles for longer. We've possibly still got a bit of a sort of hangover from COVID and the semiconductor shortage. Obviously, with elevated interest rates, buying new vehicles is relatively more expensive, so consumers may be less motivated right now to buy a new car, and so they're running their old one for longer. Perhaps people are buying electric vehicles, but because of range anxiety, they're keeping their old petrol or diesel vehicle on the road, on their driveway as a backup. So we don't know for certain, but we do know that if you talk to the recyclers, they are not seeing this flow of material coming in for them to process and provide effectively platinum as recycling supply. And that situation seems to be perpetuating. If you look at our estimates for the last 18, 24 months or so, we've been continually downgrading our outlook for recycling supply. I think the base case assumption is right that it should improve at some point, but we're modifying that as we see the data come in.
And what sectors within industrial which have declined are set to grow? And what can we discuss regarding the growth in the use of platinum in the hydrogen economy, which is close to something I follow and is close to my heart?
So industrial demand has been going through a period of exceptional strength. It's been really boosted by ongoing capacity additions in certain sectors. I would highlight glass as being one area. So we've seen a big increase in demand for consumer electronics. Part of that was related to COVID when everyone started working from home. It's a long time ago. COVID was it's almost the fifth anniversary of it, but the effects are still being felt in the markets. But also glass fiber demand as well. Things like wind turbines, renewable energy actually requires quite significant quantities of glass fiber. And so we've seen these significant glass capacity additions that have boosted industrial demand. And that's a cyclical effect. And we're coming out of that sort of cyclical uptick in terms of demand. Capacity's been added. We're now probably pretty close to glass saturation in terms of output. However, demand is expected to continue to grow for glass and particularly glass fiber, given we're, for the time being at least, continuing to add wind power generating capacity and more photovoltaics and so on. And so, it's possible that will pick up again later this decade. But for 2025, we're expecting fewer glass capacity additions, and therefore there is a downtick in terms of industrial demand. For hydrogen, it is growing really quickly. We're talking about almost 50% in terms of year-on-year growth last year, substantial growth again going into 2025. And, as a result, that's very encouraging. The hydrogen economy is coming. It is important to stress that it is off a low base, but that growth is encouraging. I think, one sort of point I'd make on hydrogen is it is off a low base. And it has taken longer than people had anticipated in terms of coming through, including ourselves. But part of the reason for that has been the availability of subsidies, which have been announced and talked about for a number of years, but haven't flowed as early as had been expected because the projects just weren't ready. We are now seeing those subsidies flow in terms of dollar and euro numbers. And as a result, that's beginning to translate into real demand for platinum.
Do you think that hydrogen economy will really belong to the 30s, or will we see a lot more ahead of the 30s?
It is going to be biased to the 30s. It's like any adoption curve. If you think about battery electric vehicles, there's a lot of talk to begin with, and it's kind of a hockey stick sort of thing, isn't it? Where you sort of get that sort of slow rate of adoption, then it really begins to take off dramatically and then goes off at the top. So, for hydrogen, like anything else, it's going to be broadly the same, any new technology. But it's where that starting point of the upturn really comes, is the bit that's, you've really got to push out that uptick by 6-12 months, and it makes a really big difference to the forecasts in the near term. The longer term forecast or outlook is still unchanged, really.
And jewelry, you seem to feel that this is going to hit the highest level for 6 years. What is driving jewelry demand?
So jewelry, when we've talked about our outlook in the past, Martin, I've sort of said things like, flat is the new up for jewelry. Amazingly, it's actually looking quite encouraging at the moment. So, if you look at it on a holistic basis, effectively what we've had is ongoing declines in demand from China. And China was a huge market for platinum jewelry in the past, peaked at over 2 million ounces in 2014. And it's declined now to around 400,000 ounces. So that's a really significant 1.6 million ounces that have come out of Chinese jewelry demand. If you consider the whole market is 7.5 to 8 million ounces, that's a lot. However, what we have seen in that past sort of 10-year plus period is consistent growth from the world ex-China. So Europe, the US, the rest of the world, helped in terms of the rest of the world a lot by India, has been growing fairly solidly through that period. And we've got to the point now where the decline in China is being more than offset by the growth elsewhere. And actually, China even is showing some positive signs. For the last 5 quarters, Chinese jewelry demand has grown quarter on quarter, which is quite encouraging. What's helping it? Well, I think the price of gold. Obviously, India is a huge market for gold demand. But the jewelry fabricators and retailers are putting more sort of countertop space over towards platinum. Obviously, their premiums are better on platinum than they are on gold as well. And also our sister organisation, the Platinum Guild International, has done a good job of developing the market there through tailored advertising and sponsorship. They've sponsored some Indian cricketers to wear platinum jewellery. Obviously, as we all know, cricket is quite popular in India, and so that's been extremely helpful.
For some time now, we've had this irony. The platinum mining industry has been reporting good ongoing demand, but at prices too low to ensure a good long-term supply. How is it possible that demand is good, but prices are still low?
Well, it's really because the imbalances in the market have been satisfied by flows from above ground stocks. So, effectively, there's been enough vaulted material sitting around that can be liberated and made available to offset the market imbalances. That's something that we think is unsustainable. We talked earlier about the impact of tariffs and the flow of material into NYMEX approved warehouses. That's something where we're seeing that metal flow from effectively what is non-visible above ground stocks into visible above ground stocks. So it is available in the future to balance the market, but it's gone to the US because they're concerned about a market shortage there as a result of tariffs. And so, effectively, those above ground stocks are being depleted or moved around, and at some point we will approach at the level where those above ground stocks are unsustainably low. And as a result, the market price will respond to reflect that. And I would observe that platinum's been in a fairly well-established sideways trading range for getting over 4 years now. So between roughly 900 and 1100. And if you put that on a chart and just draw a couple of lines, and I'm not a chartist per se, you will notice that trading range is narrowing. And typically what you'd see with something like this is as it narrows down to a point, then you have a reaction either to the upside or to the downside. Given the underlying fundamentals of platinum and the deficits, we would argue that it's probably going to be a positive response. But obviously, markets can prove you wrong. So, but certainly we're heading towards a point where something needs to happen in terms of a change in direction.
That was Creamer Media's Mining Weekly, speaking to Edward Stoke, the Director of Research of the World Platinum Investment Council.